So many forms of analysis when we are talking about accounting world. Cost, volume, profit analysis. We have analysis when it comes to cash flow. We call it cash flow analysis, budget analysis. A lot of analysis that we can talk about, but we want to look at today is cost benefit analysis that we'll be talking about. Basically, why are we talking about cost benefit analysis? We are talking about cost benefit analysis, especially when it comes to project execution, because every project, majority of the time, is capital intensive. No matter how the size of the organization, it will still be capital intensive in nature to the organization, depending on the size of the organization. Anyway, it is important equally to mention that when we are talking about cost volume analysis, we must differentiate its approach when it comes to private sector and the public sector. Their objectives actually are different. So also will be way and approach to cost benefit analysis. When we are talking about the private sector, the big organizations, conglomerates, and the like, basically their cost benefits analysis is about the economics primarily, and also the financial implication secondarily. But when we are talking about the public sector, non-governmental NGOs, we will be talking about more than financial, more than economics. We'll be talking about the life-saving implication and benefits, the life enhancement value of the project. Having laid this foundation, how should we go about cost benefit analysis? And by the way, what is cost benefit analysis? Simply put, is an analysis or review and evaluation of projects at hand and how we intend to go about it in order to ensure that we maximize our opportunities and returns. Don't forget that there are cost benefits implications to cost to project management. So opportunity cost is involved in project execution. That is the other projects that or the alternatives, and we are going to still dwell more on the alternatives that ordinarily if we did not do this, we could have gone for the plan B. So the opportunity forgone must not be left out in the cost benefit analysis of what we actually intend to execute. How should we go about cost benefit analysis? First of all, we must have in view what do we really want to tackle. And that's what tackle actually is more or less a military word, right? So, and when we're talking about project execution, it demands strength and focus and training. So, it's more or less a word of military, even though we are in business. So, what do we want to do? What resolution do we want to bring about? What opportunity, what territory do we want to conquer in our sector, in our industry? Having known what we want to do, let's say for example, we want to build housing estates. So That is an opportunity we've identified, or that's a problem we want to solve, housing problem. Now, having determined and identify what we want to go about doing, then we need to sit down and identify the options that we have. The options, what are the different approaches to, for example, that building project we want to execute as an organization. It could be equally in the public sector, not for government, housing estate. So, what are the options? Should we build the acres at once? Should we build it flats or a block per block? We build a block, we let it out, and we use the money generated to build another until the acres of land that we want to build on is totally built. So that's like two approaches. We can look at another approach, especially on the side of governmental. We want to go about building it using public-private partnership. Is that PPP, right? Yes, public-private partnership to build it, in which governments will have some part to play and drop in the funding, initial funding. Also, the public, that is the private sector, people that have interest in such a project can come together and fund it and have their own share. So now there are three alternatives approaches that I've just mentioned. So that's the second thing that we must do in cost benefit analysis. Then we'll talk about the value. What value is the project going to bring for us as executors in form of benefits? Now, monetarily, financially, economic-wise, and if it's a project on the side of the public sector, we'll talk about the impact, the societal impact, the communal impact that such a project, when well executed, will bring about to the society. Then after that, three approaches mentioned: identify what you want to do, identify options or alternatives, that's the second step. Then look at the benefits that we accrue to us as executors, as business owners, as drivers of governmental industries and parastatals. Then we compare our costs and benefits. So we compare step 2 and step 3. These are the costs. Don't forget, in step 2 we have different options like 3 that I've mentioned. So those are the cost approaches. Then likewise, the benefits of, if we go by PPE, public-private partnership. What of if we go solo and build it by ourselves, or we go by building it per block, let it out, then use the money realized to build the second block, to build the third block, and the like. So we compare the costs and the benefits, and of course the last approach, which is the 5th level approach to the analysis procedure, is we just have to take decision. We just have to take decision. If we do not take decision, it leads to paralysis of analysis. That means we've been analyzing, we are not doing anything, and it is in the action that benefit actually will materialize. If we have ideas and we do not do anything about it, it lies dormant. And if not If care is not taken, we even forget about the idea that it has ever come to our mind. So decision, and this is one critical role of every CFO and finance person. We must decide on the project which is better for our organization, looking more into the present value versus the future value of the project, and so many other things that we must bring to bear when we are dealing with project management. For those of us that are just joining the channel for the first time, my name is Gbenga Olatunji FCA, and for those that do not know the name of the channel, this is GJAMES Associates channel, where we bring to you everything you need to know in the world of accounting and finance. This is your finance expert you can trust. For over 2 decades now, more than 2 decades I've been doing this. So subscribe, like if you believe that there's a value you've enjoyed in the past 11 minutes. Why not share to other people that may like to know? And also subscribe. Make sure you click all as the notification so that anytime we upload, you will be the first to be notified. Quickly recapping 5 steps to cost analysis. Identification is important. What do you want to do? Which area do you want to go about? What territory do you want to conquer? What solution you want to bring about in the world? Then what are the alternatives of doing it? What are the approaches of doing it? It's like they say, you can kill chicken. There are so many ways to kill chicken. It's just for the chicken to die, right? Okay, but sometimes in the Western world, you can't kill animals anyhow anyway, but it's an African adage. Okay, so you must have your alternatives. Then your benefits. What are the benefits that we accrue, considering even the opportunity cost of the foregone alternatives? Then we have to compare the cost and the benefits. Step 2 and Step 2 and Step 3 must be considered under Step 4. Then in Step 5, we must make decision. Don't forget to join us next time. Gbenga Olatunji here will be signing off from GJAMES Associate. We have value to life. We have value to your businesses.